Felix here, and Tallulah, the one who's just jumping off there, has done some research. Why the heck did the market start off in the red, turn around halfway through the day? Well, there's a very good reason for that, and I think it's important you understand it so you can predict it, learn from it, and become a better investor generally. There she is, off. No stamina, those cats. All they want is to sleep, be fed, be brushed. Now we go. Before we jump into this is the biggest benchmark I've made, I think, all year. 500 stocks in all their unrivaled glory. It's a massive whop of a benchmark. Felix Friends / SP 500, and it looks like, no, not like that. It looks like this. Here we go. Look at that. Every S&P 500 company, you get to see their return on capital, their margins, their money they make, their earnings per share, trend scores, their long-term earnings growth, all that kind of really important stuff. So you get your pause on it, download it. Tallulah slept for hours to make that happen. So what is it all about here today? Well, it's about China this morning, and then halfway through the day, something happened that I think you ought to understand. And of course, the other glorious thing that happened so far this morning, we're already made $1,000 today. Here we go. P&L today, $1,000 on a Microsoft trade largely. I only did 4 trades yesterday. That wasn't much volume, but a nice way to start Monday morning, right? I closed that trade within 10 minutes of it opening, collected just under $1,000. Of course, I already shared that with you guys on the Master Options program and coaching program. But okay, this morning, China reporting a suspect GDP numbers. No, not really suspect, just disappointing, and in a surprise cut in the interest rates, which sent the markets reeling. Why? Because China buys a lot of stuff. Yeah, it's not just an export engine. There's a huge consumer market there, and also oil prices fell through the floor because China is a massive importer of oil. If you remove a little bit of that demand, well, the oil price tanks, which of course is good for inflation. So it becomes rather complicated, doesn't it? What is good? What's bad for the market? Well, one thing is, I truly appreciate this. I just got this over the weekend. 8 million views. Thank you very much, everyone, for watching. I thank you for smashing that like and subscribe button. You must have done, otherwise the videos wouldn't have spread like wildfire. So I appreciate that, and of course I appreciate you watching this one, and keep spreading it. Every little interaction shows the vicious algorithm that there might be some wisdom in here somewhere that is worth watching, and otherwise that way they'll also keep suggesting it. So what happened this morning? Well, the New York manufacturing data came in, and the activity plummets. 42 points, sharp contraction. You see that here, right? Very sharp contraction. It's as bad as it was in 2008, 09. Remember that nice recession, the end of the world kind of happening? Second biggest drop on record, only a little bit smaller than the COVID drop, when literally everybody thought, Black Death was amongst us. So significant. What does it mean? Well, it really means that business demand is falling substantially. And part of that is that businesses stocked up too much during the pandemic. So we've got this stockpiling going on, as we are likely to hear again from Walmart and Target and everybody else who's reporting this week, the big retailers, and therefore people are ordering less. They're being more cautious with the ordering, just like the consumers stockpiling dollar notes under their mattresses. Consumers stockpiled far too much rubbish that nobody needed. Now, we've been stockpiling profits instead here. We are up so far in August 23%. We've made 136% return so far this year, since the beginning of the year. So at what point do you say to yourself, I'm really missing out on something here that works? That Felix guy is clearly onto something. He does this options thing, which sounds mad, doesn't it? And I know a lot of people lose a lot of money with options because they're doing it wrong. They're buying options, they're buying leaps, they're buying calls, they're buying puts, and it's all the wrong way around. We don't do any of that because that's basically, it's sort of amateur stuff, really. It's what no one does who really understands options trading. So we do something very different. If you want to know how that works, check it out down below. Or just give us a call. In fact, that's probably the best thing to do. Go to felixfriends.org/coaching and have a chat with us, and we'll walk you through it. We'll explain to you, and then you can decide whether or not that's something you want to spend 3 hours a week doing, and to get these marvelous returns that we're getting. 136% so far up this year. And it wasn't exactly smooth sailing this year, was it? We also got builder sentiment sagging. Who comes up with these words on Bloomberg? Plummeting, sagging. home builder sentiment is in the basement. Someone's dug a basement. It's at 49, which is pretty bad. Now, that was COVID here, so it's not quite as bad as COVID, but it's still pretty bad. Why? Well, it's very simple. Rising interest rates and elevated construction costs, because if you hadn't paid attention, cost of wood and steel and labor and everything else has gone up. And then the financing costs go up at the same time, and you can think they might continue to go up for the foreseeable future. Then who the heck wants to build? And that's what's going on here. And, Robert Dietz agrees with me here. So does that mean it's good for the market or is it bad for the market? Well, let's just think this through for a second. We like a recession. Why do we like a recession? We like a recession for the very simple reason that when we get a recession, the Fed starts being kinder to us. So recession gets a little hard from us because the Fed, sends us roses rather than something more unpleasant. Less rate hikes, that's basically what that says, because that's what the Fed's trying to achieve. They're trying to lower demand. So the data is actually good news for the market, right? We like it. Less demand. But we've had a month, 4 weeks now of this rally. JP Morgan says there's more to go. Morgan Stanley says panic, build fallout shelters in the garden, throw the children and the dog into it and stockpile on, sardines. Yet here we are. What is this? This is the RSI overbought indicator. And if you look at a stock chart, you can pull this up for yourself. I'll show you how. Go to something like TradingView, which is free, by the way, and you can load any old stock chart, and then you can find an indicator which is called RSI, Relative Strength Index, one of the most popular ones. And I used to work at an investment bank. We used this quite a lot. I used to track it. I built great big spreadsheets that tracked this and gave us alerts. When you are above this dashed line here at the top, that one there, the sort of dashed one, when you are above it, you were overbought. So this stock, well, it was this Genius Brands, no idea why we're looking at that, was overbought there. If you're looking at, say, the SPY, then you are looking at an overbought SPY. Can you see that? And what does that mean? Well, it means we've kind of gone quite far. Now, at the same time, I get other indicators here that are still very bullish, this bright greenish here thing here, and I don't see personally any real resistance. Well, there is some here, basically exactly where we are. If we break through this sort of 429, 430 level, then, which is the previous peak here, then I think we've got a pretty good chance of making it all the way up to 450, even 460. But at the moment, this is kind of what's leading us down. So, but overbought, real rallies always are overbought. So be a bit careful when people throw data like this at you. This is just one piece of information to look at. It's not everything, but it is more overbought than it's been since 2020. So it's a pretty long time, right? It's a pretty long time period. So sentiment is certainly very bullish and possibly a little bit too bullish. Now, what has the whole thing therefore done if we like this recession? What has it done to Fed interest rate expectations? So there is something called the Fed futures, which is something you could trade if you really must, and it tells you where interest rates are going to go. So at the moment, so right now, the interest rate is at 2.25, and the market betting is that it's going to go 0.5% up. 60% of the market says that, 40% of the market says it's going to go up 0.75%. So the majority of people are a little bit more calm, right? If I could draw a dove, I would. I can't, therefore I shan't. Now, how's that changed? Well, let me highlight this to you down here. A week ago, what happened to my highlighter? There we go. Mr. Microsoft highlighter. A week ago, 68% of the market were expecting a 0.75 hike. Now, today, 60% of the market are expecting a 0.5% hike. So the market has done a somersault and got stuck halfway. It's done a 180. Is it a 180? It's not a 360. No, it's a 180. A 360 is where you started from, which is a really silly thing, which you see in tabloid headlines. I've made the mistake. I got laughed at. Don't do it. So That means the market is just going, it's all going to be a little bit better. We're going to get 0.5% in September, and then maybe we're going to get a quarter of a percentage point in November and in December, and we'll all be rallying into Christmas. Won't that be lovely? Even Walmart might be unstocking all the Christmas gibber that they bought last year, which is, I think, what they have to do. Now, a little bit of tidbit of data here. Do you want to know what retail investors bought in August, the last 12 days or so? Tesla. Number one, they bought the SPDR S&P ETF trust. I approve of that. AMD, well, that's probably on the basis of the whole chip stuff. They bought Apple, which I think is a great stock. They bought QQQ, that's nice diversification. NVIDIA, again, they bought that on the back of the chip stuff, although it isn't really going to benefit NVIDIA. They bought the Ultra Pro short. The gamblers are still out. I wouldn't touch that. I think Amazon's a great stock. Ultra Pro QQQ, crikey, don't touch that stuff. I think Meta is a great stock. Intel, well, it's not the greatest business in the world, but they are basically getting bailed out by the US and the European economy, European Union even. Verizon, I'm also rather muted on that. Occidental Petroleum, yeah, okay. Exxon, okay, these are obviously the oil plays. Now that oil is coming down again, I'm not sure about that. Very cyclical stuff. It's very, very much about timing. Usually we are not very good at timing. AMC, good God. And by the way, I joined an AMC Discord because I wanted to understand a little bit what was in the psychology of the AMC investor, if I can call him that. And it really is about sticking it to Wall Street. That's what I've concluded, and I guess maybe you concluded that before I did. But it really isn't about AMC and popcorn. It's about sticking it to Wall Street and screwing them over. And they did manage that with one or two hedge funds. So, I sort of no problem with that sentiment. What we do here in our GOAT Academy isn't sticking it to Wall Street. It's just making money. Really, it's not driven by fear or by hate or something, or if you wish to be driven by that, that's very, very powerful. Instead, what we simply do is make money. So if you wish to make money with us, then check it out, felixfriends.org/coaching, and there it is, links above. Join 2,500 students, which I'm incredibly proud of, and I'm incredibly proud of going onto a Discord every day and seeing all the wins and everyone going, I made this much money, I made that much money, I made 2% this week, 3% this week, 6% this week, 7% this week, and none of them are gambling. We don't buy stuff that we think is going to go up. We don't sell stuff that we think is going to go down. We don't do that 50% of, you've got a 50% chance of making money, right? It's binary, it's black and white. That's way to lose with trading. So we don't do any of that. Everything we do has an 80 or 90% probability of making us money. We're properly hedged. We are properly risk managed. We're properly diversified. And to work with me one-on-one and my coaching team, come and join us. Go to felixfriends.org/coaching, book a call, see how you get these phenomenal returns. And it isn't difficult. It isn't particularly challenging. It isn't complicated. You don't need any maths knowledge. Yes, you can have a full-time job. Yes, you can have 12 children and 6 Labradors and a very, very busy life. You could be just doing all the trades on weekends. Seriously. I did all of my trades last week on the Sunday, and it was a fantastic week. I think I made 6% last week, something like that. Up 23% on the month so far for August. So check it out. felixfriends.org/coaching, even if you're just curious about, what this random chap Felix here with this odd Germanic accent's doing. And thank you very much for watching. Seriously, in no words describe 8 million views. It's very, very surreal. Obviously, I wanted to be 10 million now and 2,500 students. Obviously, I now want it to be 100,000 students. That's just the way I'm programmed. So what's the advantage of being in it at the beginning? Well, quite frankly, you at this point, if you join coaching, still get one-on-one time with me, which obviously once we have 100,000 students is going to be pretty nearly impossible, I would have thought. So thanks for watching. Thanks for tuning in. And I hope you enjoy these little macro updates. If you do, let me know in the comments. I'd appreciate that.